You want to share your screen?
You should be good to go. Thanks, Jeanette.
Bada bing. There you are, value charts. All right, here we go. All right, you have 1 hour. Good luck.
Thank you very much.
I feel like Alex Trebek. You have 1 hour. Good luck. You have 1 minute to answer the question, the magic question. Yeah. How do we make money trading? All right, here we go. Go ahead.
All right. Well, welcome everybody to tonight's presentation. Thanks for hanging in there for me. My name is Thomas Wood. I'm the Director of Trading Operations at valuecharts.com. Tonight we're going to be discussing naked trading, which is trading without having any indicators. It's based on reading price action alone. Now, when I do these webinars, if you're taking time out of your day to come spend with me, I want to make sure I'm actually giving you knowledge, something you can actually use. So by the end of tonight, you're going to basically have an entire trading strategy that's very simple but highly effective for trading, basically in the over-the-counter traded market. It's all about technical analysis, and it's all about reading the price action of the market. So before we jump in with anything, we have to go over the risk disclaimer really quick. Trader investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com is taking reasonable measures to ensure the accuracy of the information contained herein. However, ValueCharts.com does not guarantee its accuracy and is not liable for any loss or damage may result directly or indirectly from such content from any inability to access or information or any delay in or failure of transmission or receipt or any instruction notification in connection therewith. Any past performance results shown for illustration example only are hypothetical and as such have many limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. So now that we got that out of the way, we also have to show you CFTC Rule 4.41. Yeah, I'm talking really fast, and that's just because we're going through it all. I'm not going to read CFTC Rule 4.41. All this is saying is basically that if we are showing you examples from the past, obviously there's no guarantee that it's going to happen again in the future. And that being said, I do not teach any strategy to people that I'm not willing to trade with real money myself. So I'm not going to sit here and tell you, hey, go do this. This works really well, but then not actually trade it myself. So strategies I teach, if you've been in any workshop with me, you've been in the webinars with me, they all are things I have tested and traded live myself before I bring them out to everyone here. Now, the other thing is, when I do a webinar, all right, I try to make sure that I answer as many questions as I possibly can. So if you have any questions at any time, just send in through the questions tab. I'm going to take a break at the end of each section, basically, and I will answer as many as I possibly can. Now, if you ask a question while I'm on a slide and it's relevant to that slide that I'm looking at, so we need to look at that specific chart, then I would be happy to show you that chart and answer your question there. So let's go ahead and move on in. One question that is often asked is, well, this is great, but how do I get in? So you're going to learn something. You're going to say, okay, well, I understand how to read the trend. I understand how to determine the direction of the market. That's great, but you haven't told me how to get into the trade. So don't worry. Again, I broke this webinar down into two sections. First one is understanding price action to determine trend and understanding the price action to determine overall market direction. And then section two is entering larger trends using minimal risk, using what we call a micro trend. The other thing that is asked all the time is, great, so you're showing me examples from the past where they cherry-picked and they worked perfectly. Why don't you go show me something from today? Well, assuming we have enough time, which typically I do when we do these types of webinars, I'm going to pull up TradeStation at the end. We'll go look at some live markets, and I'll show you some of the setups from the past couple of days in the trading room that we've been trading. And a few different markets, plus we can go look at whatever market you would like to look at. And we can look at the setups that were there on whatever time frame it is that you want to analyze. So first things first, what is naked trading and how do you know market direction? Well, naked trading is referring to trading based on only price action. Okay, so it's reading the charts. If you think about it, you're out there and there's a billion indicators available to traders. And I go and I do a lot of training. I've worked with thousands of people, ranging from people managing billion-dollar funds, literally over $4 billion, and people managing their own portfolio of $5,000. Okay? Now, you look at their chart, and they might have 50 different indicators on there, and they go, I just don't know what to do, whether I should go long or short, because I have so many conflicting signals. And the first thing I'll say is, well, you can't even see where the price is at because you have so many indicators on there. So what we're doing with naked trading is we're going back to the basics, going back to the simplicity of reading the price action itself and understanding how a market actually behaves and how a market moves. Now, I'm not sitting here telling you that indicators are bad. I trade with indicators. All right, I use indicators in all my charts, and they are there to help you. But when you have so many indicators on your chart that you cannot even see what the price is doing, how are you going to know which way you want to trade or whether or not you're in the correct trade? And the other thing is you get indicator like lock, like I said before, where you are having so many conflicting signals, you have no real setup to actually place a trade on. So the first thing you need to understand, from now on until forever, every trend is going to be defined in one of three ways. An uptrend is going to be higher highs and higher lows. Okay, higher high plus higher low equals uptrend. A downtrend is lower high plus lower low. So let me write this out for you. Higher high plus higher low equals uptrend. Lower high plus a lower low equals a downtrend. All right, and then the third is anything outside of those two. So if you have a lower high plus a higher low, you're in consolidation, and it's considered consolidation or reversal. So if you're not putting in higher highs and higher lows or lower highs and lower lows, then the market is consolidating or reversing. All righty? Now, once you understand how to identify these trend patterns and the overall direction of the market, one of the great advantages of it is if you want to be a trend trader, you can get into a trade and hold that trade for a very large gain and catch out these huge moves, especially with the volatility we've been having recently. With a lot of the markets, we've had some massive trends over the past year and a half or so. The other thing is, whether you're a day trader or a swing trader, the logic applies the exact same, right? You can apply this type of setup to any time frame chart you want to look at. So if you're day trading, instead of analyzing a 240-minute chart or a daily chart, all you got to do is look at a 5-minute chart or a 2-minute chart. Right? If you're swing trading, so you go, I don't want to be in day trades, I want to be in trades that last several days at a time or several weeks at a time, then look at a weekly price chart or look at a daily price chart or a 240-minute price chart. Okay? The longer the time frame or the larger the time frame is that you're analyzing, the further the trend is going to last. All right? The shorter the time frame is you're analyzing, the shorter the time the trend is going to last. So the smaller the move is going to be. Chris is asking, are there multiple time frame analysis required? No, not at all. When you're trading a trend, you're trading the trend on that time frame, unless you're trying to do multi-time frame analysis to time an entry within the context of a larger move. But for simplicity's sake, for what we're talking about tonight, all we're going to talk about is looking at one chart, reading that one time frame, and understanding the way that market moves. All right? Now, one thing that happens a lot of times through my experience with working with traders is they have a hard time finding the trends. And what they're missing is all you got to do is really take a step back, can press your chart or literally stand up and step back from your computer and look at the pivot points. All right, so when I say higher high and higher low, by the way, what I'm referring to are pivots. The market goes like this. Okay, these are pivots. Pivot low, pivot high. All right, so that's an uptrend, and a downtrend is the exact opposite, lower highs and lower lows. So when you get too caught up, what you start looking at is within these big swings we have, you also have little tiny swings like this. So it actually goes like that. And they start getting caught up on the little swings and they don't understand the big picture. So if you get too caught up and you find yourself having a hard time determining trend, get up, take a step back, and look at it from a distance where you can see the major pivots and you cannot see each individual bar compared to the last. All right. The other thing is, don't worry about finding the exact top or bottom with this type of strategy. We're not going for the top or the bottom. There are strategies out there that work for tops and bottoms, such as candlestick reversals, divergences, etc. But what we're looking for is going for that middle 80%, because that's where the money is at. All right. If you could take out 80% of every trend that a market has, you're going to be a very happy camper. So once you enter a trade within the context of a trend, right, you can manage your stop for your exit by trailing it just behind the previous higher low or just above the previous lower high. All right, this way you guarantee you stay in the trend as long as you continue to put in higher highs and higher lows, or lower highs and lower lows. And as soon as the previous high or low is broken, you get out, because then the market's going into consolidation or reversal, and you don't want to be in it there anyway. So let's take a look at a price chart. This is crude oil, probably the #1 market I trade. This is on a daily price chart. So these are the pivots, all right? We have a high and a low. We have a higher high. We have a higher low. So remember, higher high plus higher low equals uptrend. So we know we're in an uptrend here. We have a higher high and a higher low and a higher high. All right? Then what happens? The market comes all the way down, breaks through the previous low. Okay, so you're out of this because the trend is over. You go into a lower low, so we put in a lower low. Now it's not reversed yet. Trend is not over yet until we put in a lower high. When does that happen? As of this price bar right here. Now we're in a downtrend. Why that price bar? Because now we bounced, we pivoted from the highs and had about a 50% retracement, roughly, for a lower high. So now we have a lower low plus a lower high equals downtrend. So we have a lower low and a lower high, a lower low. Now here, we have a slightly higher high. This becomes a higher high. However, we never put in the higher low. Instead, we go and break back down to a lower low. So trend continues, lower low, lower high, lower low, lower high, all the way down. Okay? So we had an uptrend from here all the way up. Then we had a downtrend from here all the way down. All right? Now you look at this. This is a very large move. Okay? This is a move from trend started at about 96, 97. We went all the way down. Where are we trading at right now? 45.82. Okay, so we're at 45 right now. That's a huge down move. You're talking about $50,000 a contract worth of a move. You can absolutely trade that if you're looking for a daily price chart and you're looking for those swing trades to catch a major trend. Nothing wrong with that at all. I personally trade intraday. Now going forward to the rest of the webinar, what I've done is I put lines on here identifying the tops and the bottoms of the pivots so you can see where the highs and lows are, so I don't have to sit there and mark off each one. But the same logic is going to apply, okay? Higher highs, higher lows, an uptrend. The red line's where we broke the previous pivot low, right here. So now we have a lower low, and then we're in a downtrend as of the middle after we put in that lower high, okay? Conceptually, how do you separate market moves from individual stock moves? If that's where you are heading, you're now talking about oil. But imagine your method also applies to individual stocks. Absolutely applies to individual stocks. Right here we have an example of Tesla. And again, at the end, I'm going to pull up any market you want to look at. We can go look at the pivots, look at the trends. So this is Tesla. This is on, again, a daily price chart. And I'll show you some intraday examples here in a minute. We have a high, and we have a low. Okay, and we have a lower high. Then we have a higher low. So what does that mean? Remember, when we don't have higher highs and higher lows or lower highs and lower lows, what do we have? Consolidation and reversal. What do we do when we're in consolidation? We want to trade the breakout because the breakout is when the trend resumes. How do we know when the market's breaking out? You draw a trend line. That's all you got to do. Draw your trend lines connecting your pivots. Here's your breakout. Trend resumes. Because now we have a higher low from the previous pivot low down here. We go up, we break through the trend line, and we put in a higher high because we broke above the previous pivot high there. So now we're in an uptrend. Goes all the way up, pivots high, and then low, higher low, higher high. Then what happens? We roll over, we come all the way down, break and put in a lower low. Okay? We come all the way down, put in a lower low here, lower high, lower low, lower high, lower low. So we had an uptrend from here up and then a downtrend from here over. Okay? With being an intraday trader, what time frame do you use? I like using a 2-minute chart or a 500 tick chart, and I'll show you some examples of that here at the end. So here's British pound US dollar. This is another example on a daily price chart. So on a daily price chart. Everybody following along so far? Pretty simple concept, but once you really get the hang of it, this is a game changer for trading trend direction. Okay, this is a game changer for directional bias when you know, okay, I want to only be taking long trades or only be taking short trades. All right, so we have high, low, high, low, high. So these are higher highs, higher lows, right? So that's an uptrend. We break the previous pivot low. We have lower lows, lower highs, and a downtrend. All right, now with this, we're not looking at these minor pivots here, and I'll show you what these minor pivots are in just a minute. These are what we call the micro trends, these small pivots within the context of the larger pivots. All right, we're looking at the major turning points. That's why I say if you ever get caught up and you don't understand or you cannot tell where the market's actually heading, take a step back, look at the major pivots. Is it overall in an uptrend or overall in a downtrend? All right, how many bars on both sides to find the pivot? We're not using defined logic for it. What you're looking at are the major price swings. Now we actually have an indicator that we're working on right now that's using defined logic for pointing out pivots, and I'll show you that here in a little bit if you want to see it. But what we're looking at for example's sake tonight is just the major swings. Okay, look at the major swings. When you take a step back and you look at it, is it a large move compared to what a normal move is for that market? Does that make sense? So this is gold. Here's an intraday example. This is gold. This is on a 30-minute chart. All right, so we have a low. We have a high. We have a higher low. And we have a lower high. So what's that mean? That means consolidation, draw your trend lines. There are trend lines. Okay, where's the breakout? Well, we break out right over here. What does that mean? Well, we break to a lower low, so now we have a downtrend because we have a lower low, and it goes right back to the most recent pivot, which is a lower high. So lower low plus lower high equals downtrend. We go pivot down here, we bounce right back up, puts in another lower high, another lower low, another lower high, higher low. So we have a higher low within the context of a downtrend. Consolidation and reversal. So what do? Once again, we're going to draw our trend line. Well, I can draw a straight line connecting the pivots. We'll draw a trend line. If it breaks that trend line, we're going to be assuming it's resuming the downtrend, so we'd be looking to go short. However, what does it do instead? Well, instead, it bounces back up and breaks the previous pivot high. So now we have a higher low, plus, as of breaking this point over here, we have a higher high. So what's that mean? Uptrend. Higher high, higher low, higher high, and trend continues on up. All right? Makes sense. Here's another example. This is a shorter time frame once again for those of you that are day traders. This is Apple. This is on a 5-minute price chart. Here's a low, here's a high, here's a higher low, and a lower high. So what does that mean? Once again, it's not higher high and higher low. It's not lower high and lower low. It's consolidation and reversal, so we draw our trend lines. Where's our breakout? We break to a lower low. Now we have a lower low plus a lower high up here from the previous pivot. So we're in a downtrend. Lower low, lower high, lower low, lower high, higher low. So right here, it bounces. But what is this? This is a higher low within the context of an overall downtrend, so consolidation and reversal. It's not reversing trend yet unless it breaks the previous pivot high. Okay? So what do? We draw a trend line. There's your sell entry to resume the downtrend. Lower low, lower high, lower low, lower high, lower low, lower high, higher low. Once again, draw a trend line. It doesn't break the trend line. Instead, what does it do? It bounces back up and puts in a higher high. So now we have a trend reversal. So we have a higher low here, plus we broke the previous pivot high, so now we have a higher high. So then we put in another higher low, higher high, higher low, higher high. So we have overall downtrend all the way over till here, and we put an overall uptrend. Makes sense? Again, all you're looking at is the pivots. We're staying really simple. We're not looking at indicators. We're not looking at any trend, anything other than the pivots, the market price action itself, because that's what matters. It's where the market's traded and trading. All right. The question is, are you entering on retracements or breakouts of the swing points? Latcher, at the end, in the next section, we're going to talk all about entries. All right. I just want to make sure everybody understands the concept of the trend before we move on to how do you actually enter this trend. Once you understand higher high plus higher low, or lower high plus lower low, then you're in really good shape. to be able to get directional bias and then start timing our entries with less risk. Because what we don't want to do is go in and say, hey, the trend just shifted, and just throw on a trade and risk the entire account because the trend shifted, and we're assuming that trend's going to continue on forever, because it doesn't. Okay, so questions on what is naked trading and reading price action trends. Do y'all understand the concept of naked trading being trading the price action itself, and then reading price action trends for understanding the overall direction of the market? Just keep in mind, higher highs plus higher lows is uptrend, lower highs plus lower lows is downtrend. Everything else is consolidation or reversal. Okay? So, now let's move on to the fun stuff. Getting into the trade, stop placement, exits, all that good stuff. So trading micro trend breakouts within the context of the underlying major trend. Major trend is defined by the major pivots. Minor trend is defined by the minor pivots, okay, or the micro trend. So now that you understand how to identify what a trend itself is and the definition of an uptrend and the definition of a downtrend, you'll start to see what we call micro trends or miniature up or down trends within the context of a major uptrend. Okay? These micro trends will oftentimes give us entry opportunities to jump back in when a major trend resumes its original direction with very, very little risk. Okay, because what we're doing, because we're timing our entries with a micro trend and a breakout on a micro trend, we expect the market to follow through right away. We expect it to move our direction and start continuing to run within just a couple price bars. What does that do for us? Well, because we expect it to move right away, we can use a tighter stop because we expect it to break and run. So we can use a tighter stop loss. The other thing we can do is we can have a time stop. So we give it just a few price bars, and if it doesn't move by the third to fifth price bar, we can just go ahead and close the trade because it should move very, very quickly. Now, there are exceptions, but we don't have enough time to talk about the exceptions to that right now. Alrighty? So when you see a short-term series of higher low, higher high pivots within the context of a major downtrend, you draw a trend line connecting the lows. So just a general rule of thumb for trend lines. All right? If you are drawing a trend line on the bottom of the price bars, we want that trend line to be angled up. Okay, so we want to see the price action to have done this. Put in a higher low. Okay? So on the bottom of the price bars, it needs to be angled up. If it's on the top of the price bars, it needs to be angled down. So if it's on the top of the price bars, we want to have seen the price action come in, have done this type of thing where we pivoted and then pivoted again. Or put in lower highs. All right, so just a general rule of thumb for your trend lines. The other thing is, we do not trade the close. We do not wait for the market to close above or below the trend line to take the trade. We enter on the break. Now, when I say enter on the break, I do not mean if this is market's coming up, we're not going to buy right here, right as it breaks. We're going to wait until it gets through it a little bit, and we'll buy up here. Okay? So we're going to make sure it actually gets through the trend line, but we do not wait for the close. And I'll show you some examples of why you don't do that here in just a minute. Alrighty? Here's that same crude oil chart. Now I zoomed in a little bit so we can see the minor pivots within the context of the overall downtrend. Remember, as of this point right here, that's where we changed to a downtrend. So that's when we put in that lower high. And we're now saying, okay, it's in a downtrend. We have bearish directional bias. Let's try to find an entry. So within the context of the major downtrend, what do we have? We have a low and a high and a higher low and a higher high. So these are minor pivots compared to the previous pivots. Why are these minor pivots? Well, the previous pivots are moving $10 a barrel. Okay, now it's not trading gold per barrel, it's crude oil. So the previous pivots are moving $10 a barrel. The minor pivots are moving $3, $4 a barrel. Okay, this was before volatility picked up. Now we're having $3 or $4 days. But we have higher lows. So what do? We draw our upward angled trend line connecting the pivot lows because we have a higher pivot low within the context of an overall downtrend. When do we enter? We sell on the break. Okay? Where does the stop go? above either the breakout bar's high or above the high of the previous price bar. So if it's the breakout bar's high, it's going to be here. Previous price bar's high, it's going to be here. Okay? Depends on your risk tolerance. What happens? It should move our direction within 3 to 5 price bars. So we have 1, 2, 3 price bars, and then 4, 5. By the 5th price bar, we're now down here. So what do? We go break even. Then what happens? Price bar 6, 7, and 8. And now we're all the way down here. Okay? Makes sense? Do I go over the Russell? We will absolutely look at the Russell because the Russell is a great market for this setup, this type of setup. One of my favorites for the indices to trade. All right, so then what happens? We come down, we go, shoot, we missed that. Let's say we missed that entry. Well, let's look for the next entry. Where's the next entry? Look at our minor pivots. We have a higher pivot low here, a minor pivot compared to the previous pivot within the context of an overall downtrend. So what do? Draw our uptrend line, upward angled trend line, sell in the break. Now, what happens with this? I said there's a couple exceptions, and I said we didn't have enough time to go over it, but we'll talk about it for a minute. This is a retest, okay? A retest is perfectly acceptable. That is when the market bounces back and was previously support, then becomes resistance. So there's our resistance. It was support here, it's now resistance here, so we break down, we bounce up, we retest, and do what we call a last kiss. That's where the market jumps up, retests the broken support, now it's resistance, and goes goodbye, and it sells off. What happens? We sell off, form another micro trend, a higher pivot low within the context of overall downtrend, upward angle trend line, sell in the break. Here's continuation. All right? So you have 3 different entry opportunities within the context of the overall downtrend. This market just rips and rips and rips, and each one is making several thousand, $10,000 to $20,000 per contract. All right? So let's take a look at another one. This is Apple, once again. Remember, we broke out of the pennant up here, so we entered the downtrend. Then what do we have? We have a higher pivot low here, and we have a higher pivot low here. Why did trend not reverse? Trend did not reverse because we did not break the previous major pivot high. Remember, it has to have a higher high and the higher low to change to an uptrend. So what happens? We break, we draw our upward angle trend line, connecting the 2 pivot lows, we sell in the break, stops at the high. Here's our continuation. Once again, draw our trend line, sell in the break, stops at the high. Here's a continuation. That's a good question. Do you wait for the close of the intraday price bar if it's good enough to enter? You don't have to wait for the close on intraday. You enter as soon as it breaks or just a few ticks below the trend line. So instead of entering right here, as soon as it breaks, you'd be entering right down here. This is why. If you're a day trader, this is a big Apple move. If you wait for the close of the price bar, you've now given up this much profit. All right? Why not let it run? You are letting it run. I haven't talked about exits yet. Remember, when you're looking at the trend, lower highs and lower lows, how do you manage your stop? You trail it behind each consecutive lower high. So if we sold here, once we go break even and we get this lower pivot high, then we're going to trail our stop here. Get this lower pivot high, trail our stop here. Get this lower pivot high, trail our stop here. Get this lower pivot high, trail your stop here. Where do you exit? Right over there. Now, honestly, you probably would have exited right down here because this is a textbook hammer, but we're not talking about trading the candlesticks right now. All right, next one. Remember, trend shifts because we put in a higher high and a higher low. Then what happens? We have a micro downtrend. If the trend line is going across the tops, it needs to be angled down. Where's our long entry? On the break. Here's your continuation. Now, when I personally trade, I do not trail my stop behind the consecutive pivots unless I'm trading multiple contracts, depending on the account I'm trading at the time. So if I'm trading one of my larger accounts, then yeah, I'm going to be trading multiple contracts. I'm going to take off half, and then I'm going to trail stop on the second half. If I'm trading a smaller account, which I always use this for reference because the majority of traders out there are trading smaller accounts. If I'm trading one lots, for example, when I take my long here, my stop's down here, my target's going to be 2-to-1 or 3-to-1 reward risk. Okay, so 2-to-1 would be right about here, 3-to-1 would be right about here. All right, and then I'm just going to go ahead and get out. Why do I want to do a 2-to-1 reward risk, and what does that mean? 2-to-1 reward risk means I am taking profits at 2x the amount I was risking on the trade. So let's say I took a trade that I was risking $100 on the trade. So my stop loss was $100 worth of risk. My target is going to be $200 worth of profit. Why do I do that? Well, if you have a 2-to-1 reward risk ratio, so for every one you lose, you make 2 on their winners. Statistically speaking, you only have to be correct 34% of the time to be a net profitable trader. Again, statistically speaking, you only have to be correct 34% of the time to be a net profitable trader if you maintain a 2-to-1 reward risk ratio. You can almost have a 2-to-1, or you can almost have a 34% success ratio by throwing darts at the dartboard and guessing. All right. The number one problem with traders that are struggling with being profitable or with staying trading long term and blowing out their accounts is they do not have 2-to-1 reward risk ratio. They do not have a good reward risk ratio at all. Majority of traders I talk to, they have about a 0.4-to-1 reward risk ratio. So they make $40 for every $100 they risk. That's very, very bad. It makes it so you have to be right 70 to 80% of the time to make money. Why would I want to do that when I can only be right 34% of the time to make money? Okay? You apply your method as well to instruments of more mean revering nature, such as expected volatility derived instruments, or do you pose that on a small enough scale that there's no difference between them? There's not really any difference between them. What if it went down on that last leg? What if it went down that last leg? If it went down in the last leg, here, we would have traded the short because the trend would have been intact. So if this had come up and come down and broken lower, then this would have been a micro trend. We would have been selling right here for the continuation of the downtrend. But it didn't. We can talk about what ifs all the time. What if the market had done that? Well, it didn't. We trade what the market is doing. And we go off of the probabilities of continuation of the market continuing. So this was the British pound, remember? We had a uptrend coming over here because we had major swing, higher high, higher low. Well, within the context of that major upswing, we had minor downtrend. Downward angled trend line going across the tops. Here's your long entry. Why would not wait for the close? Because if you wait for the close, that means you got long all the way up there. And now instead of having to break even stop, you're sitting there worrying, hoping that it's going to continue to go your direction and get you in the money. Okay, then remember what happens? We reverse trend because we break through the previous pivot low. So now we're in a downtrend over here. Here we have minor pivot high within higher lows within the context of overall downtrend, but we do not break the previous major pivot swing high. So we sell on the break and follow through very quickly. Same thing here. Higher pivot low within the context of overall downtrend. We do not break the previous pivot high, which would have been up here or right here. We stay in the downtrend. What do? Upward angle trend line. Sell on the break. Here's continuation. Okay. Will we get a recording of this naked trading webinar? Sure. I think you're getting a recording, Keith. That's what Jeanette said. Here's another example. This is the dollar yen. This is on a 15-minute chart. Again, at the end, I want to pull up live charts so you can see what it looks like live, and I'll show you some of the trades from the past few days. This is dollar yen, 15-minute chart. So for intraday trading, overall pivots, lower highs, lower lows. Right here, though, we have two higher pivot lows within the context of overall downtrend. Draw our upward angled trend line, sell on the break, and it runs right away just like it's supposed to. Once again, higher pivot lows within context of overall major downtrend, upward angled trend line, sell on the break, continue lower, higher pivot low within context of overall downtrend. They actually formed what we call an ascending wedge because you had resistance right at the highs, so we kept poking. Sell on the break, there's our continuation lower. Okay? Initial stop is either above the previous bar's high or above the breakout bar's high. So for example here, we break right here, so we're selling right here. Our stop's going above previous bar's high. Okay, selling right here, stop goes below previous bar's high. Selling right here, stop above previous bar's high. Okay, so you have pretty close stop losses for the continuation of the trend. Because again, when you're trading the breakout, it should run right away, just like each one of these do. They run right away. And it happens all the time. If it does not run right away, what do? We close the trade because it's not meeting our expectations. Sometimes you'll close it with a small gain. Sometimes you'll close it with a small loss. But if it hasn't hit our stop and it hasn't run, we're going to go ahead and get out. Okay? So, before we pull up live charts, which I'm about to do here in just a minute, this is what we have for you here tonight for being a part of the workshop or a part of the webinar. We have the Naked Trading Workshop, this is the tip of the iceberg, okay? If you like naked trading, which is reading the price action and placing trades based off of what the actual market is doing, the workshop is for you. You don't have to have indicators for it. You can just look at a price chart, okay? valuecharts.com/naked. Normally we charge $400 for the workshop because we're doing on demand, meaning you'll get it as soon as you pay for it. You'll get a copy of the video. We're doing it for $297, okay? First 100 people, valuecharts.com/naked. Now, if you need help getting that workshop, you can send an email to support@valuecharts.com. If you ever need help with any of our products, support@valuecharts.com. The other thing is, make sure you follow me on Twitter, @TradesWithTom. If you don't believe me that we talk about these types of setups before they actually happen, go to my Twitter or my stock twits, go look at the past setups. For example, bonds this morning at 8 a.m., we said, bonds should go lower because we have a bearish engulfing pattern on the dailies. What happens? Bonds went lower because we had a bearish engulfing pattern on the dailies. Okay? So, feel free to go to valuecharts.com/naked, get signed up for that workshop. You get it on demand, which means you get a copy of it from now and forever. So what is in that workshop? Why is it so good? Well, we talk about what's a high-low and a low-high reversal. We talk about the highest probability channel breakouts. We talk about trends, micro trends, and how to skip the false signals. So we ask the question, what do you do about the trades, or what do you do about the false signals? Well, in that workshop, we talk about how you skip false signals, how you know when it's going to be a false break. We talk about consolidation patterns. Which way is the highest probability going to break out to? Okay. If we go into a channel, or do we have a higher probability breaking higher, breaking low? How can you tell? Talk about trading the second break. So if it breaks and has that false signal, and then you go and you break the trend line again, when is it a good idea to take that second break? When is it a good idea to just leave it alone? Why indicators are clouding judgment, and there's a whole lot more extra stuff that's in that workshop as well. The workshop's something like 3 hours long. Again, that's valuecharts.com/naked. Just go ahead and go there. You can sign up. This is what it looks like. Once you go there, it'll pull you up to this screen right here, Naked Trading On Demand Workshop, $297. Put in your information, click place order, and it will get you, and it will email you all your login details to log into the valuecharts.com website and view the recording. Okay, now let me answer questions, and let's take a look at some charts. So, this is the euro, right? And if you want to, you can go to valuecharts.com/go, get a $7 trial, go back and watch the members' videos from 2 or 3 days ago, and watch me call out the short signal right here before this day. So I said it was a sell signal on this day, said it was a sell signal on this day, based on a break of the previous daily low. Worked out perfect. Same thing over here. Here's your trend. Which way is the trend going? Please, everybody, say down. Because if you say down, then you weren't paying attention. Or if you say up, you weren't paying attention. What is this? This is our micro trend. Well, where's the break? Right over here after FOMC. Well, what did I say that morning? Watch it until after FOMC and see if we break the micro trend line for the short. If we do, the continuation down to the next support level. What happened? It broke the micro trend line after FOMC and fell down to the next support level. Okay? This is not my platform. No, this is TradeStation. So you want to see some other markets. Crude oil, as I said before, is my favorite market to trade. Here's a 500-tick crude oil chart. Let me show you some of the trend lines here recently. So this was today's price action, okay? What did we have right at the beginning of the price of the day, right before this big move up? Remember the pennant pattern I was talking about? When you do not have higher highs and higher lows, and you do not have lower highs and lower lows? Well, what is this? There's your pennant pattern. Where's your long? Right here. Now, did we buy on the breakout? No. We actually bought on the break above 45.59. Why? Because that was a previous pivot high, which is resistance. What happens as soon as you get long? It rallies, and it rallies some more. Okay? Now let's go back yesterday. Everybody's going to say, well, what about yesterday? Yesterday had a huge move up. yesterday is a perfect day for micro trends. Why? Overall trend is up, right? Major pivots are higher highs, higher lows. So what's this? That's a micro trend. Why? Because you have a lower pivot high within the context of overall up move. Where's the long? Right there. What happens right after you get long? It shoots straight up. Let's take a look at another one. What happens? Here's a lower pivot high within the context of overall uptrend. Where do you get long? Right here. What happens? We immediately shoot straight up, pull right back down, put another higher low, and shoot straight up again. Pull right back down, put another higher low, shoot straight up again. Trend continues to climb. Where was the original entry on that day? So where was the original entry yesterday? Right here, on the break above 78. Why was that the original entry? Because of an inverted head and shoulders price pattern. And again, all we're looking at here is price patterns. This is just price action reading. Inverted head and shoulders is a perfect breakout pattern to the upside. The long is on break above 43.78. Where's your long? Right there. What happens immediately? You rally, consolidate a little bit, and shoot straight up. Okay? What other markets do you want to look at? Be happy to pull up any markets you want to look at. We can talk about the trends and micro trends, overall direction of the market, etc. Someone wanted to see the Russell. Remember that. So this is the Russell. I told you 2-minute chart's my favorite time frame for the Russell. So, which way is the Russell heading? We look at this market. Which way is the Russell heading? Major pivots, lower highs, lower lows, right? Where are our micro trends? Here's your first micro trend. Here's your break, bounce for your retest, then continuation lower. Where's the second one? Right here. Same thing. Break, bounce for the retest, and then continue lower. Okay? Make sense? We'll go look at it yesterday. Here's yesterday's price action. This was FOMC. FOMC came out, shot straight down, then reversed. Where'd the trend? Higher pivot highs, higher pivot lows. Where was your micro trend? Right there's the only one you had. Would you be upset with that trade though? If you sat on your hands all day, then that's the only trade you took. You break, and in 6 minutes you went from 67 all the way up to 70, so you got $350 a contract basically in a matter of 6 minutes. Not a bad trade. Before we had that big down move in the Russell. I'll have to load some extra data. The day before when we had the big down move. Let's go take a look because that had a perfect setup. Which way is the trend going? Trend is down. Where's our trend line? Here's our micro trend. Same thing right over here. Which way is trend going? Trend is down. Where's the micro trend? There's our micro trend. Make sense? What do you have right at the top of that micro trend? Head and shoulders pattern, which we discussed head and shoulders, inverted head and shoulders, how to trade them, etc. in that workshop in Naked Trading. What other markets do we want to look at? The S&P. The S&P today. The S&P today, this is what we looked at in the trading room. We said micro downtrend within context of larger uptrend. This is on a 30-minute price chart. Micro downtrend within context of larger uptrend. Break high right here. Where's the target? Previous pivot high. What happens? You jump right up just about to that previous pivot high, retrace, retest, and higher lows, higher highs the rest of the day. Paul, you said hi, Tom. Paul here from Michigan. Spoke to you earlier today about the mentorship. How about that? My wife must have just got home. Would I suggest this as a primer for you, as you mentioned, not be able to do mentorship until around January? If you want to, you could do this as a primer. However, if you're doing the mentorship, we're going to cover this in a little bit more detail because it'll be one-on-one. What about 30-year bonds? Let's take a look at bonds. Bonds. Okay, this is what we talked about. And again, please doubt me and go look at my Twitter and stock tweets if you don't believe me, because we sent this out before it broke. What's this? This is a head and shoulders pattern on a 120-minute price chart. By the way, let me show you your stock tweets, okay? Let me go to my profile. Here you go. Bearish engulfing pattern on yesterday's daily candle, watching for lower prices. That was at 8:17 this morning. 8:17. This is the 8. This bar closed at 8 a.m., so it was right after this bar closed. What happens? Bonds just tanked. Now you go, well, you're getting in late. Okay, fine. Look at yesterday. Bonds, 120-minute head and shoulders pattern, 158 and 132nd neckline. Watch and be careful of FOMC at 2 o'clock. Here's your 158 and 132nd neckline. That was yesterday at 8:47 a.m. There's your 10 a.m. bar. When does it break? Right over here before 12 o'clock. Here's your 158 and 132nd. Left shoulder, head, right shoulder. There's your breakdown. Retest, and sell off again, just like it's supposed to. Now, you're looking at that and you're going, well, that's not talking about the pivots that you were talking about in the workshop. Okay, you want to do the pivots. Which way are the major swings going in this market right now? Major swings are down. Where are your micro trends? There's your first micro trend. There's your breakdown. Runs straight down through the floor. Immediately after getting in, which is exactly what it's supposed to do. Where's your next one? Well, the next real pivot you had was yesterday's low. Where was that? Right here. Where's the breakdown? What did it do right after breaking down? It immediately fell through the floor. Now, these are day trading. These are trades that are lasting just a couple hours at a time, and you're talking about $1,000, $2,000 a contract on each one of these trades. Okay? The Russell can move fast. Now, it takes some stop loss after proper entry. It depends, Arthur. It depends on what the price action looks like. Normally, stops are placed based off of price action, not based off of a dollar amount risk. How do you handle the stop and retest on the S&P? If you were in the trading room, you're talking about that 30-minute chart. If you were in the trading room this morning, we were actually saying it was profit-taking while it was up here at the highs. Why did we say it was profit-taking while it was up here? Because you were just shy of the resistance of 85 and a quarter. So your long would have been right here. You're out up at around 84, which is a point and a quarter away from the target. I saw it in the room. Great trade today. Glad you did, Arthur. Or Paul, excuse me. I was reading Arthur's question and I'm saying Paul's name. Can you go over each future market and go over what time charts we should be using? No, not right now, Steve. That's going to take way too long. Again, if you want to learn the methodology of trading, this is super simple. It's straightforward. It's to the point. Just go to valuecharts.com/naked. I always find it funny that traders are willing to go blow out $60,000, $100,000 accounts, and then they go, man, I probably should have gotten some education before I started trading. But they're not willing to pay $300 for a workshop that can potentially turn their trading all the way around. So, again, valuecharts.com/naked. I have never had any person tell me they did not learn something from the workshops, even if they've already taken the other workshops that have similar information, because I always try to add something new. I'm always trying to give you knowledge, whether it's a free webinar like today or a workshop, paid workshop, like the Naked Trading Workshop. Follow up on that 2-minute chart for Russell. After your first entry you showed, that retrace, would that have stopped you out? No. Because I should actually tell you, I should have said this. When you're trading the very short-term charts, your 2-minute chart, your 1-minute chart, your 500-tick chart, you are not using the previous bar's high or low for your stop placement. You're using the previous pivot high or low for stop placement, and it should still be close enough that you're not risking a lot of money. So, for example, here, I guess this one you wouldn't have been stopped out, but this one here, you're not using the previous bar's high, okay? You're going for above the pivot high. So this entry would have been at 66.90, 66.80. Your stop's at 68.20. Okay, you're risking $150 on the trade. How far does it move? Well, it drops all the way down to a low before even bouncing at all, down to 59.70. So you're talking $600 gain on $150 risk. Not a bad trade whatsoever. Again, the better that reward-risk ratio is, the more forgiving the market's going to be for you, the trader. Okay? I'm going to look at Apple. Sure. Apple. Let's take a look. Well, can you tell me which way the trend is going? Where are your pivots? Low, high, higher low, higher high, higher low, higher high, higher low, higher high, all the way up. Trend stayed up. Actually, I guess right here you poked below the previous pivot low. But did it reverse trend? No. Why? Because we did not put in a lower pivot high. What did you have first thing this morning? Well, there you go. This is perfect. Glad you wanted to look at Apple. What happens when you have higher lows and lower highs? You have a pennant pattern. What do you do with that? You draw trend lines. Now, the other thing you could have been looking at was, After we pulled back right after the open and then bounced and pulled back again, you could have said, okay, now we have a micro trend within the context of overall uptrend. Where's that break point? Right here. And that's perfect. That's exactly what it should do after breaking out. It should accelerate your direction very, very quickly. And look at this. Perfect inverted head and shoulders. Where's your neckline for the inverted head and shoulders? Right there. Where's your break? Right here. What happens right after you break? You bounce, retest, and you continue higher. It's textbook. The Naked Trading Workshop is on demand, John, so you can get it now and watch it whenever you want. You could watch it tonight if you wanted to. It's on demand, meaning it's a recording from the last workshop, so you can. It's a 3-hour-long recording. It's like going and watching a movie, but it's all about trading the price action. Again, valuecharts.com/naked. Let's take a look. This is some of the feedback we got from the last workshop, from the Naked Trading Workshop. Thomas, I wanted to let you know how much I appreciated the Naked Trading Workshop. Learning how to recognize and apply the foundational principles of raw price action is extremely powerful. The techniques you shared have already made quite an impact on my trading. Many thanks. I wanted to thank you for putting together the Naked Trading Workshop. After reviewing it several times and testing the concepts the last 2 weeks, I really think it has helped to simplify my entries and give me a clear, rules-based approach to help eliminate the hesitation I have struggled with. This is the 5th workshop of yours I have attended, and I think it's the best work. This is the one I think everyone should start with and build on. Thanks for your help. I've mentioned this to other traders. The Naked Trading Workshop, in my humble opinion, is as you said. It's the basis for everything in trading and should be the first class that any new trader should learn. A must. I see everything more clearly, and I believe my trading has dramatically improved. In a small account, I have more than doubled the amount utilizing that which I learned in your workshop together with your incredible trading room callouts. Once again, thanks for all. Like I said before, I've never had anybody tell me your workshop did not teach me anything. On any workshop I've ever done. And I pride myself on that, if you couldn't tell. So, what other markets do you want to look at? What other markets do you want to look at? You want to look at longer time frames. Trading in the raw. You could call it trading in the raw. I like it naked trading because you're trading a naked price chart. The NASDAQ. Sure, this is the NASDAQ. It's been rallying all night, or all the nights, the entire night session. We had a lot of chop today in the NASDAQ. This is actually what we looked at in the NASDAQ. Oops. This was a 30-minute chart. This morning we had resistance, resistance, resistance. We did the same thing we had with the S&P where we were saying, okay, we have an overnight micro downtrend within context of larger uptrend. Here's your break point. It rallied all the way up, hit the resistance from the previous pivot, and then reversed, resistance, reversed, resistance, reversed. You said, okay, if it breaks through it, we should resume the uptrend. That's exactly what's happened. What about the pound yen? The pound Japanese yen on a 60-minute chart. On a 60-minute chart, trend just reversed to upside. We broke through the previous pivot high after putting in a higher pivot low. Okay, so here's lower lows, lower highs, right? And then we bounce, put in a high, and then a higher low, and a higher high. So what's that mean? It's an uptrend right now. If you pivot down like we are, now one bar pivoting is not enough. It needs to be several price bars. And you could be looking for a micro downtrend within the context of larger uptrend and continuation higher. This right here, textbook head and shoulders once again. Head and shoulders patterns, inverted head and shoulders patterns are stellar setups, if you ask me. Go look at stock twits and Twitter. I send them out all the time. Again, you can follow me on Twitter or stock twits at Trades with Tom. Talk about the trading room, price, what you trade all day, etc. The trading room, I run the futures and forex trading room. David Kino runs options and equities trading room. I trade basically all the futures markets you can think of. Main ones I personally trade are NASDAQ. Crude oil is the number one market I trade. 30-year bonds in euro. Those are the four that I mainly trade myself. However, we follow a large number of markets, and we review every single one throughout the day. We also trade Forex. Swing trades in Forex only, though. Day trades in futures, swing trades in Forex. Trading room is open from 8 a.m. Eastern until noon Eastern. Dave's options and equities room is open from 9 a.m. Eastern until 1 p.m. Eastern. Unless there's announcements like FOMC, then we both leave our rooms open longer for the announcement. You can get a 1-month trial. If you just want to come check it out, you can get a 1-month trial of the trading rooms. Go to valuecharts.com/go. valuecharts.com/go. It's $7. You can get an entire month. After that, the price is $150 a month for both trading rooms and all the end-of-day setups. You are already in the room for a trial. Glad to have you with us, Keith. Am I buying options on these instruments? No, I'm trading futures. Dave trades options and equities. Again, valuecharts.com/naked for the naked trading workshop. Once again, I will tell you, I'm not sitting here saying indicators are bad by any means. You see my other price charts. This is what my other price charts look like. Okay, I have indicators on here. I'm not saying indicators are bad. What I am saying is having 50 indicators on here where you cannot see the price action. The price action on every single one of my charts is the number one thing we look at. Why? Because that's where the market is trading. Okay? I don't know of any crystal ball indicator that can say, well, the market is going to go trade over here. No, the price action tells us where it's trading, and then the indicators can help increase the probabilities. All right? Well, I want to thank everybody for coming out again. Once more, just go to valuecharts.com/naked. Make an investment in your trading career. Make an investment in your trading future. It's only $297. That's less than 90% of the people I talk to risk on the trade. Again, valuecharts.com/naked. You can get that workshop. It's on demand. You'll have it from now until forever. So, Jeanette, I want to thank you for having us.
From now until forever, he says.
Yep. Thanks again, everybody, for coming out.
I haven't seen your Twitter before. I need to follow you. I need to go follow you. Thank you, Thomas. It's always good to hear you come and speak. You stay right on time and get to the point, and that's what we like to have here at Trade Thirsty. So thank you very much, and I hope you have a great evening. I'm going to take the ball back real quick so I can put my thing back up and remind everybody what we did tonight. And